Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This we get everything you need to know in 90 seconds at 9 o'clock, with news away from the guns and hatred consuming the US at present. Our challenge is to keep it out of our society. Markets had been waiting for the American August CPI inflation data, and it came in higher, although no more than expected. It rose to 2.9% in August, the highest since January. In a stable world, this level of inflation would not bring market expectations of a Fed rate cut next week, but there are widespread expectations of one anyway. And that is because their labour market is weakening, and quite fast now. Initial jobless claims in the US came in sharply higher last week at 263,000, a four-year high, and well above the expected high of 235,000. Also getting much worse, much faster, is the US federal government finances. The US budget statement was expected to hold at a very high $290 billion for the month as a deficit, but it has blown out to $345 billion in August. And that is after collecting $30 billion in tariff taxes in the month, $165 billion so far in the fiscal year. Whatever way you look at it, the US economy is being mismanaged on a massive scale. Too much inflation, too little job creation, too large tax avoidance by the uber wealthy, and self-imposed tariff taxes on themselves. And unfortunately, their social programs are making things worse at a fundamental level too. Across the Pacific in Japan, producer prices there rose 2.7% in the year to August, up from a marginally revised 2.5% increase in the previous month. This data doesn't really add stress or new factors for Japan. A year earlier, producer prices rose at 2.6%. In China, new vehicle sales recovered in August, up 10.1% after the unexpected 10.7% fall in July. Total vehicle sales are expected to grow 4.7% in 2025 to almost 33 million units, up from 31.4 million in 2024, with the new energy vehicle sector surging 24% to 16 million units. In Europe, the European Central Bank kept its three key interest rates unchanged. And in Australia, consumer inflation expectations rose to 4.7% in the September survey by the Melbourne Institute, from August's 5-month low of 3.9%. This is the sort of news the RBA will not welcome. No rate cut is expected for September, but one is for November the 4th, although that might get reassessed now. The US Treasury 10-year yield is now just on 4%, down 3 basis points from yesterday at this time. And the price of gold will start today at $3,635 an ounce, down $10 from yesterday. And American oil prices are down $1 at just over $62.50 a barrel, while the international Brent price is similarly lower at just on $66.50 a barrel. And the Kiwi dollar is now just over 59.7 US cents, and up another 20 basis points from yesterday. Against the Aussie, though, we're down 10 basis points at 89.7 Australian cents. Against the euro, we're up 10 basis points at 50.9 euro cents. That all means our trade-weighted index starts today at just over 66.8 and unchanged from yesterday. You can get more news about the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.